The markets had a rough day yesterday, and I was initially surprised about that considering NVIDIA's GTC conference and Jensen Huang's speech was pretty incredible. And also with the Trump and Putin call, although it wasn't great, it was better than feared. And the market still sold off yesterday pretty badly. Investors, all eyes are on today's Federal Reserve meeting. It's likely that the Fed will continue pausing rates, and they're going to pause them for a while because they want to see the effects of Trump's policies of decreased immigration and the tariff policies, as well as just some of the uncertainty and growth concerns there. In their eyes, the growth concerns and inflation concerns are equal, so they want to stay pat and do nothing in order to not make a mistake. I still think they'll be on the more dovish side, maybe hint to maybe 2 rate cuts this year, but we'll see. And let me talk a little bit about NVIDIA's event yesterday. It was a really good event, in my opinion. Jensen Huang said that the computing demand is 100 times more than what he anticipated last year due to agentic AI and reasoning. There were fears after DeepSeek that there'd be less demand for AI chips because of cheaper models. But he's actually saying in order to perform more complex thought with agentic AI and reasoning, it'll be 100 times more compute. So that puts some of the fears with DeepSeek at bay. That's Jevons paradox. As the cost goes down, the demand actually goes up. It commoditizes AI. NVIDIA is the arms dealer for AI. It's the pick and shovels play. And that was pretty good. They unveiled new chips. Their Rubin chips. First Blackwell Ultra, then Rubin. And, those were pretty incredible in terms of the capabilities. Jensen Huang also said that, data center demand will be huge. And then, in order to power the data centers is big. So in my eyes, one of the biggest beneficiaries of, the AI arms race, besides NVIDIA, is, power players, utility players, and nuclear plays to power AI and data centers. In my opinion, that's, Constellation Energy, NNE, it's Oklo, and those are my top plays, I would say, right now. Oh, and CCJ, it's a uranium play. Those are my top plays right now for energy and nuclear. Also, NextEra Energy, I'm sorry. But on top of that, Jensen Huang also said that, full self-driving, he announced a partnership with GM for their full self-driving capabilities. And then the next phase after agentic AI and AI agents doing a lot of work for you is physical AI and robotics. So there's so much demand for AI, and NVIDIA is still the arms dealer and pick and shovels play, supplying these chips in AI. So this was a really good meeting. It was like not last year they called it a Woodstock event for AI. This was like a Super Bowl event for AI. So this was huge, and it should help the market. NVIDIA initially sold off after this conference, but I think that was just more to risk-off sentiment in the market in general due to these growth scares and anxiety about the Fed meeting today. So all eyes will be on the Fed meeting today. We got to see what they're going to say. As I said, I think they're going to hold rates because they're uncertain about how these policies will affect the economy. They'll just want more time. And then I also wanted to make a point about, a lot of what I'm seeing right now in the market is very similar to 2022. In 2022, the Fed raised interest rates very rapidly in order to combat inflation with monetary tightening. And what we're seeing right now with some of the back and forth with the tariffs and decreased immigration and, the Doge cuts and austerity cuts is fiscal tightening. So right now, the trading action in the market's kind of pretty similar to what we saw in 2022. And unfortunately, 2022 was a bear market, down 19.4% for the whole year. I'm not saying we're going to see that now, but that's why I slashed my S&P 500 growth forecast, because of the fiscal tightening that was broadcast. And just like the monetary tightening that was forecast, stocks went down. And with fiscal tightening, and they're telling you that there's going to be pain, a transition period, and detox period, it's likely stocks will go down. And who knows if it'll go down more than here. We already had a correction. And just because we had a 10% correction, that doesn't mean we'll have a recession. In fact, 56% of the time, if you have a 10% correction, it doesn't mean we'll have a recession 1 year out. So